Hey guys, welcome back to the YouTube channel. Welcome back to a new video. So this video I'm going to be talking about market structure and how to get entries around this, how to identify uptrends and downtrends. So if you're new here, welcome. Please hit that subscribe button. We're doing weekly videos every weekend, and then every so often, like throughout the week, like every other week or something, we'll do an educational video like this. So you can expect frequent uploads from us. So hit that subscribe button, turn on the notifications so you know when we upload. And let's get right into this video. So guys, starting off, so the market moves in waves, something a bit like this. So how do you identify if the market is uptrending or downtrending? Well, this consists of higher highs, higher lows, and lower highs and lower lows. So when the market is uptrending market, it will consist of higher highs and higher lows. When the market is downtrending, it will consist of lower highs and lower lows. So guys, looking at this little chart I've drew here, so this here will be a higher high, this pullback here would be a higher low, this area here, and this here will then be a new higher high, because you can see this was the last higher high, price has come down, made a higher low, and then come up here. So this area here is taking out this previous high over here, so this here now is a new higher high. So then what price done is it come down, and you can see this was the last higher low, and it's broken that. So this uptrend here is now invalid, and we're now downtrending. So this here will then be a new lower low. So this is a lower low. Market come down, pull back. This is a lower high. And just say this continued. So what you can do is you can mark out the last higher high, or lower low. You can mark this out, and if price breaks this, you can identify that the market is still downtrending because it's making new lower lows. So then you can wait for a pullback, look for this new lower high, and that's where you can introduce trend lines. So something like that, look for that third touch from this higher high and this higher low, and then on this pullback from this lower low. And also Fibonacci's, you can trade the retracement. See, that's how you build confidence around a trade, guys. So you're following market structure, you've got this trend line, you've got this Fibonacci retracement, market's made new lows here, so you're expecting a lower high, so you're going with the market structure. So that's how you build confidence. So let's just get rid of this a second. So guys, I'm just going to quickly run over it again. So higher high, higher low, higher high, higher low, higher high, price then comes down, takes out this last higher low, makes a new low low, lower high, lower low, lower high, lower low. So yeah guys, something like that. So now I'm going to show you how I trade a ranging market. So this is what a ranging market would look like. Something like this. So you could almost say this is resistance and this here is support. So imagine it's all parallel. So how would I trade this? I wouldn't trade these lows or these tops. What I'd wait for is a break either to the upside or to the downside. So then just say the price broke down to the downside. So what has happened here, this has made a new lower low. So what I'd look for then is a pullback and make this lower high. So another good thing I use, guys, I use this rectangle tool just to mark out this ranging area. So say price has made this new lower low. What you wait for then is a retest of this consolidation zone and to make this new lower high. And then you can look for like a Fibonacci retracement here to give you a better entry, and you might have like a trend line or something from 0.1, 0.2 or 0.3 for example, and after making this new lower low, comes up for a new lower high. It's you got a good chance of price coming down and making a new lower low. So yeah guys, that's how I trade a ranging market. I don't trade the tops or the bottoms like this. this is what most retail traders do. So just say it's made a top here, they'll look for this top, stop just above. Majority of the time they're going to get stopped out because everyone's doing that, and what everyone's doing in the market, it's a bit too obvious. So majority of the time they're just going to get stopped out. But anyway, let's go to a real chart now, and let's start identifying lower highs, lower lows, higher highs, higher lows, and ranging markets, and how we go about trading this. So starting here, just this side of the screen, starting off right here, this here, what is it? This here is a new lower low. Market comes up, you can see here, this area here, price hasn't broke this area, so this here is a new lower high. So I'm just going to use these to make it quicker. So price comes down, makes a new lower low, this is the lower high. So what you can do, guys, you can mark out these last lower highs. So this is the last lower high. So then price comes down again, makes a new lower low, and what did price do then? Price broke out above this last lower high, so that means this downtrend is now over and we're now uptrending. So what you can mark out then, this is a new higher high, this area here. So what you're looking for then is you're looking for a higher low. So this is where you can incorporate patterns, Fibonacci's, trend lines, etc. to build confidence around this. So once you know this last low high has been broken, and we've made a new higher high, there's a good chance we're going to come down and make a new higher low before then pushing up even higher. So right off the bat here, I can see we've got this inverse head and shoulders. So this is the left shoulder, head, and we made this right shoulder here. So this would have been a good trade. So you're following market structure, and you're looking for patterns, and this lines up well. And then of course you can put on this Fibonacci. You can see we traced to the 50% quite nicely. So that's one example, guys. So I'm just going to go and find an example of a ranging market now, and let's see. So guys, zooming in here. So you can see we consolidated in this area. We ranged for a bit. You can see here, this was the last higher high, and I used the bodies and not the wicks. So this area here. The last higher high. So guys, you can see we then come down and made this new higher low. And then price pushed up, it failed to break this new higher high. So you can see that this uptrend is now becoming weak because it's failing to break this last high. So then what did price do? It broken out its consolidation zone, made a new lower low. So what you can wait for then, once this makes a bottom, you can snap on a Fibonacci, something like that. Wait for this pullback to make a new lower high, using Fibonacci's and trend lines. So what, let's have a look, see if anything lined up. So just see this, point 1, point 2. This ain't a pre-plan, I'm literally just doing this. Price come up, broken out, made a new lower low, so you're expecting a new lower high. Price comes back into this consolidation zone, makes this 61.8 Fibonacci, makes this third touch of this trend line, and what is it? So you can have a nice sell on here. So I look for certain candlestick formations like pin bars, shooting stars, etc. So if I'm finding that on the lower time frames, like the 1 hour, 30 minute and 15 minute, I would enter this trade here, following market structure. And what did price do? Come down and made this new lower low. So guys, I know it's quite basic stuff, but you know, it's good to know. Majority of the time I am following the trend, and just knowing this can help your trading massively, especially using it alongside like like key levels, trend lines, and Fibonacci. But yeah, I hope this helped you out, guys. If it did, leave a comment in the comment section below. Please give it a thumbs up if you did enjoy it, and please subscribe, and we'll see you in the next video.